In this video, let's talk about the concept called financing of working capital margin. So now this might give rise to the eyebrows. What? Whether working capital margin can be funded? Let's understand this. Let's say you are starting a new business and that business demands an investment in fixed assets. Let's say all those are long-term assets. Let's assume it is 10 crore. Now you approach the bank for financing this long-term asset. Bank says you have to bring in margin. Let's say at the rate of 30%, it means you have to bring in 3 crore. It means bank is ready to sanction term loan of 7 crore. Let's assume that this 3 crore is the only money at your disposal. And whatever you had, you brought it as margin for purchasing this long-term asset. Now you want to kickstart your business. If you want to kickstart your business, if you want to make use of these assets, put them into production and make sales, then it is very critical you should also have invested money in the production process. It means you should have invested money in the items required for the production process. It can be investment in raw material, investment in production process, investment in finished goods. And if the customer is going to demand credit, then you should also investment in debtors. So we call this collective investment as investment in working capital. For this, you can approach the bank and request for working capital credit facilities, which may be in the form of cash credit. But for sanctioning this cash credit, again the bank will put a condition that you have to bring in a margin. So already you are bringing margin of 3 crore for term loan. Now margin is required for supporting the cash credit also, which can be challenging, especially when you are starting a new business. So banking system recognizes this difficulty. So what they will do? They will also include working capital margin as one of the cost of the project. It means your term loan will also include some additional element which is meant to support this working capital margin, and this is how the concept of financing of working capital margin comes into picture. And here we go, Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.